Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1403A, and today's date is October 17th, 2017, and the title of the episode is, The Fed is Stuck. 2 more rate hikes will bring down the economy. Let's get into the economic collapse financial news. Now, as we know, we've been reporting on how companies, they've been manipulating their data, and of course they're reporting on earnings and how great it is while they're closing manufacturing plants, while they're laying off people, and they never really report on the revenue or the sales because, again, that wouldn't make the company look like it was doing very well. Well, we know going back in time, there were many corporations that manipulated their data, Enron to be one of them. And we see that Kobe Steel out in Japan, this is the third biggest steel producer, they admitted falsifying data about the quality of steel, aluminum, copper, iron powder, and other products it sold to customers across virtually every single industry. And, of course, when this news comes out, the stock tumbles, and it tumbled around 43%. And they've been falsifying this type of product quality data for decades. It's not like they just started a month ago. They've been doing it for a very long time. But it gets better. That's not all they did. Not only did the company, having already been caught, lie to shareholders, they also lied to the employees on how long this illegal behavior has been going on. And basically, what has been going on is that they've been lying for a very long time. Now, as new management came in and new plant foremen and everything else, they kept the lie going for many, many years. And nobody said a word. Now, once again, we've seen corporations lie about their accounting information. They lie about other information. And we're going to find out. And I'm not saying this is going to happen tomorrow. But we're going to find out a lot of these companies that are reporting that they're doing fantastically. They're going to be reporting that, things aren't that great. And it's all going to come out when everything starts to collapse. Think about this for a second. Go back to 2005, 2006, 2007. The automobile industry here in the United States told us that everything was great. Everything was fantastic. They were doing incredibly well. And then when everything fell apart, they had to admit, listen, the company is dead in the water. We have too much debt. We don't have enough to pay our bills. They had to close plants. They had to drop some of their car manufacturing lines. And this all came out when the system fell apart. The same thing is going to happen because the revenue and the sales from these corporations, they just aren't there. And this is why, when you hear on the news, this is why they've been selling a lot of their assets. This is why they've been laying off employees. This is why they've been buying back their stocks to make it look like they're doing a lot better than they really are. Now, U.S. industrial production, that has been declining for quite a while. And all of a sudden, industrial production shot up. Now, this is the survey. This is not the hard data once again. Now, what they did is they went back to August, which was a negative 0.9%, the worst since May 2009. They revised that number, and they made it a 0.7% instead of a 0.9% drop. And they pushed up this month. And when we look at, and that's the soft survey data, the hard data, the actual manufacturing reality, it really didn't go anywhere. Manufacturing has been pushed and pushed and pushed, but they just can't get it off the ground because perception is not reality. And what we're seeing right now is that they're manipulating the data as best they possibly can, but the economy is rapidly falling apart very, very quickly. And there's really nothing they can do about this. And basically what we are seeing right now is the end game, where they continually manipulate. Companies will be getting caught, manipulating data, lying to customers. The truth will eventually come out. I mean, think about it. If you go back to 2006, 7, 8, I mean, Bear Stearns, Lehman, no one ever thought that these companies would be in trouble. AIG and the rest of the banking community, financial institutions, no one thought this was going to be a problem. Everyone thought everything was great. The same thing is going to happen, except this time it's going to be a lot worse because they've been falsifying data for a very long time. And you know what happens when you falsify data for a very long time. When the truth comes out, everything just completely falls apart. Now, the Fed has been holding back, and they haven't been raising rates. They said, okay, you know what? We're going to raise rates, and wait a minute, we're going to have to hold off on raising rates to see how the economy's doing. And they haven't done it since the beginning of this year. And the reason for this, and Deutsche Bank is out there saying the reason why they haven't done this is because if they raise the rates 2 more times, the Fed will lose control and the economy will come down. Now, you say to yourself, well, how could that be? Why would this happen? Look what happened when they raised it a little bit. The housing market took a little bit of a hit. If they raise the rates once again, once or twice, they will bring down the economy very, very quickly, because the automobile industry will be hit, the housing market will be hit, all those corporations that are taking the free money at very, very low interest, they will be hit. All of this will happen at the same time. Now, they understand this, and the Fed is caught, and their back is against the wall right now because they're trying to convince everyone that the economy is doing well. Now, an analyst at Deutsche Bank is out there saying that if we don't see a sustained cyclical jump in wages, then yields won't go up. And if yields don't go up, then the asset price ascent will accelerate. Then you'll have a nightmare for the next Federal Reserve chief because they'll have to pop a bubble. And I'm saying it's more than one bubble. Now, the Fed at this point is stuck. If they don't do anything, the entire system is going to come down on its own. Because the real economy, and I'm talking about what is happening in retail, what is happening in the housing market, what's happening in the job market. I'm not talking about the fake job numbers that they keep putting out, saying that jobs are down to 4.2%. I don't care if they can come out and say it's down to 3.8%. If that is so true, then why isn't retail doing a lot better? Why isn't housing doing a lot better? And I'm not talking about the 20 cities that they pump the bubbles up in. People would be saving, people would be spending, the tax receipts coming into the state, into the federal government, would be a lot higher. The reason why they created FACTA and GACTA is because they needed to go across the globe and they needed to look for more money for tax purposes. And guess what? There wasn't that much out there. And the government is stuck, but they're continually borrowing. They can't stop borrowing. And this is why the debt continually rises and rises and rises. So what does the Fed do at this point? Well, if they raise rates once or twice, it's going to affect a lot of the financial industries. And we're going to see a domino effect, and a lot of this is going to start to fall apart. And we're going to end up in the same exact place that we ended up back in 2008. Because what did they do? They raised the rates before 2008. Things started to fall apart. Then they started to lower them. It was too late. They already initiated the collapse. The same thing right now. The problem is, it's a lot worse. They have $4.5 trillion on their books. The global debt is astronomical. Wages are declining. Retail is imploding all over the place. Not just brick and mortar, but online is not doing as well as they're saying. People are losing their jobs. People don't have the full-time jobs that they once had. People don't have the equity in their homes like they once had. There are still people out there that bought their homes during that housing bubble of 2006, 7, 8, and those houses never reached the same point. People are now purchasing houses at a very high rate in these 20 cities, and those are going to come down. This is going to be a disaster when everything starts to fall apart. Then we have the corporations that are reporting on their earnings, pretending that everything is fine when revenue is suffering because they don't have the sales. So right now, the Fed is going to be blamed no matter what they do, and they understand this. So what are they doing? Right now, they're doing nothing. Actually, what they're trying to do, and the cabal's trying to do, is they're trying to get some type of an event. They want the spotlight off of them. This is what they've been pushing for all along, and it's a very difficult thing to do because, again, we have the cabal, which is being forced out of government right now. Yes, they're still in there, but their plans that they had, it's all coming to an end. And the economy is deteriorating very, very quickly. So the clock is ticking down. It's only a matter of time. And if the economy comes down without this special event, guess what? People around the world are going to look at the central bank and they're going to blame them. This is why for countries where they're in a massive amount of debt, they never let them fail, because if they let them fail, it's under the central bank watch. This is why they always make some type of deal, because they need to keep the country in a limbo state where they really can't do much, but they owe a lot of debt. So here we are. The clock is ticking down. It's only a matter of time. The economy is rapidly falling apart. And after this holiday season, it's going to be a complete and utter disaster. So get prepared, get ready, because we're getting closer and closer. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.